Hey everyone, and welcome. Today we are diving into one of the biggest questions in all of finance. What actually backs Bitcoin? I mean, it's not gold, there's no government promise behind it, so where does its value come from? To figure that out, we actually need to start with the money we use every single day.
So let's start with a quick reality check. Did you know that the cash in your wallet, whether it's dollars, euros, yen, whatever, isn't actually backed by a pile of gold sitting in a vault somewhere? Nope. Most of the world's currencies cut ties with gold decades ago. The US dollar, for instance, did it all the way back in 1971.
And that really brings us to the two classic kinds of money. On one hand, you've got commodity money. Think of a gold coin. Its value comes from the actual physical stuff it's made of. And on the other hand, you've got fiat money. This is what most of us use. Its value comes from one thing and one thing only: our trust in the government that issues it. It's valuable just because they say it is. And then there's Bitcoin. It just completely breaks both of those molds, right? It's not made of anything precious, and there's no central bank or government guaranteeing it. This is what makes it so fascinating, but also, let's be honest, pretty confusing. So, if it's not backed by stuff or by trust in a government, what in the world gives it value? Well, the answer seems to lie in three really powerful, interconnected pillars. Okay, our first pillar is code. This is fundamental. At its very heart, Bitcoin isn't backed by a human promise, it's backed by its own software. And this code enforces a set of rules that are, for all practical purposes, unbreakable. And the most important rule of all, scarcity. And this number you're looking at is everything. 21 million. That's it. That is the absolute final number of Bitcoins that can ever be created. It is hardwired right into its DNA. So unlike national currencies that, can be printed whenever a government decides to, Bitcoin's supply is totally fixed and completely predictable.
So, how does the network actually enforce that strict limit? It's through this really clever built-in event called the halving. About every 4 years, the code just automatically slashes the reward for creating new Bitcoins by 50%. The last one just happened in April 2024. This whole process makes new coins harder and harder to come by over time, and it guarantees that the very last Bitcoin won't be mined until somewhere around the year 2140.
And the reason for this design was pretty clear from the start. The whole idea was to create a kind of digital gold. Its programmed scarcity was a direct response to traditional fiat currencies, which can lose their purchasing power over time as governments just print more and more money. All right, so that brings us to pillar number 2, cost. See, the security that makes the whole Bitcoin network function isn't free. It's actually backed by a massive, ongoing investment of real-world resources. We're talking about energy and serious computing power.
The system behind this is called proof of work. Here's a simple way to think about it. Imagine this giant global race where thousands of super powerful computers, or miners, are all competing to solve the same incredibly hard math puzzle. The first one to crack it gets to validate the latest block of transactions, add it to the public ledger, and, here's the prize, they get rewarded with brand new Bitcoin. It's this intense competition that keeps the network secure, and boy, does it take a lot of energy.
And here is the absolutely crucial point. All of that energy, all that work, it's not a waste. It is the security system. To try and cheat the network, a bad actor would have to control more than half of its entire global computing power. And the cost to do that is so ridiculously, astronomically high that it makes a direct attack pretty much impossible.
And this quote really nails the core idea. All that energy being burned is basically the price of trust. In a system where you don't have a central bank to vouch for everything, you have to buy security with something real, something measurable, and that something is raw computational work.
And just to give you a sense of the scale we're talking about here, the energy used every year just to secure the Bitcoin network is often compared to the entire energy consumption of a country like Poland. Yeah, that is the staggering cost that backs the integrity of every single transaction.
Okay, our third and final pillar is what ties this all together: consensus. This is the human element. Because let's face it, code and cost don't mean anything without people. So ultimately, Bitcoin is backed by the collective agreement of millions of people all over the world who choose to use it, to build on it, and to believe in its value.
This all works because of a powerful idea called the network effect. Just think about the first telephone or the first person on social media. They're not very useful on their own, right? They only become valuable when more people join. Bitcoin is exactly the same. Every new user, every merchant, every developer who gets involved strengthens the entire network and makes it more valuable for everybody else.
And you can actually see this playing out in the data. If you look over time, you see this pretty strong correlation between the growth of the network, which we can kind of measure by looking at the number of active wallets and the market price. As more and more people jump in and start using it, its overall value tends to follow.
Now, supporters will tell you this consensus is built on Bitcoin's properties as a form of sound money. It's durable, it's scarce, it's super easy to move around. But it has one feature that really sets it apart from anything else. It is censorship resistant, because there's no central authority, no single person or company can stop you from sending or receiving a transaction.
But of course, not everyone is sold on this. And it's really important to look at the other side of the coin here, to address the common criticisms and the very real skepticism that surrounds Bitcoin's value. So what are the main arguments against it? Well, first, you'll hear it has no intrinsic value. No, you can't build anything with it like you can with gold. Second, its price is famously wildly volatile, which makes it pretty unstable for day-to-day payments. And finally, some people argue it's all just a bubble, driven by what's called the greater fool's theory. The idea that people only buy it hoping some greater fool will come along and buy it from them for more.
So to put all of this into perspective, it's really helpful to compare Bitcoin directly to the asset it's most often compared to, gold. How does this brand new digital technology really stack up against the time-tested, ultimate store of value? This chart really highlights the trade-offs, doesn't it? When it comes to scarcity, Bitcoin is in a class of its own with that absolute fixed cap. It wins hands down on portability, but, and this is a big but, its major weakness is volatility, where traditional assets are way more stable. So you can see each one has its own unique mix of strengths and weaknesses.
So, let's wrap this all up. Bitcoin isn't backed in the way we traditionally think about it. Instead, its backing is a totally new model. It's a framework of verifiable guarantees, written in math and secured by energy, that anyone on Earth can audit for themselves.
And that entire framework rests on these three pillars we talked about. Its value comes from its code, which guarantees mathematical scarcity. It comes from cost, the real-world energy expense that proves its security. And it comes from consensus, the growing global network of people who agree that it has utility and therefore value.
So at the end of the day, maybe the question isn't just what backs Bitcoin. Maybe the real question is, what do we, as a society, want to trust? Do we want to trust the decree of a government, the physical properties of a shiny metal, or the verifiable mathematical rules of an open, decentralized network? That's the powerful question that Bitcoin forces all of us to think about. Thanks so much for tuning in.